will be doing a vote on elections by oral vote, probably.
Okay. If I can safely touch buttons, I will. And if not, know that you have my vote of confidence.
And just so you know, Senator, this is Keenan, we're not using the voting apps. It's going to be voice.
Yeah, I'll be on the road. So I'm listening in, and I just, if it's safe and it seems like that makes sense, then I will. And if not, I'm trying to err on the side of caution.
Great. Good.
Hey, thank you.
Good thought.
Good morning, everybody.
Hey, Mark.
The new JLARC members are very punctual. I like it.
And we, Senator, we do have a quorum now. So if you, I think there's still some, we're supposed to have really good attendance today. So I think there's some more members are probably going to connect, but you could start whenever you want.
Yeah, I know, for the new members of JLARC, the best thing of the Zoom virtual meetings is JLARC attendance is shot through the roof. Okay, so with that, we will call the JLARC meeting
recording in progress.
Are we doing new member introductions first, Keenan, and then doing roll, or? Okay, so let's go ahead and start with the new member introductions. And so we have April Berg and Keith Gaynor. They're the newest additions to JLARC, and why don't we give each of them a chance to introduce themselves and tell us a little about their background. Representative Berg, did you want to go first?
Sure. It's great to be here. Happy to be appointed to JLARC. I am Rep. April Berg. I think I know most folks on the call. I represent the 44th, Mill Creek, Lake Stevens, a little bit of Marysville, a little bit of Everett, City of Snohomish. And I am currently the Vice Chair of Finance and on the Education and Local Government Committee.
Excellent. And Representative Gaynor, I'm actually leaving for Chelan after close of business today, going there for a long weekend visit. I'll be heading to the 12th.
When you pass through Dryden, just wave. I'm Keith Gaynor, represent the 12th district, which is Chelan, Douglas counties, and parts of Grant and Okanagan. I've been in my past life, I was a county commissioner. We have Orchard here in Dryden. So they said when Senator Mullet comes by, he get a good view of the most beautiful part of the state. So I appreciate having the opportunity to serve on this committee. Thank you.
Excellent. Representative Palat, you have a question?
I just want to note, and as part of the welcome, that both our two new members are invaluable members of the House Local Government Committee, which is slowly, surely, apparently taking over the JLARC. And they are wonderful to work with, and I'm very excited to have them both on board.
I don't know if I'm going to sleep any better at night knowing the House Local Government Committee is taking over JLARC. I hadn't made that nexus until you just said it. Okay, why don't we go ahead and have staff call the roll for the JLARC members that are here.
Good morning. This is a roll call for attendance at the July 21st, 2021 JLARC meeting. Representative Berg.
Present.
Representative Fye.
He's not on the line, but we're trying to get him a connection, so I anticipate he'll be here momentarily.
Okay, thank you. Representative Fring.
Here.
Representative Gaynor.
Here.
Senator Hasagawa.
Here.
Representative Hoff. Senator Lovelet.
Here.
Senator Mullet.
Here.
Representative Orcutt.
Here.
Representative Paulette.
Here.
Senator Rivers.
Present.
Senator Saldana. Senator Short.
I'm here.
Representative Stokesbury. Senator Wagoner.
Wagoner is present.
Senator Wilson.
I am here.
Thank you. We have 12 in attendance and possibly 13 in a few minutes.
Yes, and I see Representative Fai's on the line. You want to?
Oh, Representative Fai?
Present.
Oh, thank you. So we have 13 in present, so we do have a quorum.
Excellent. I think our first item of business is putting myself out of a job here. I think we're going to have executive committee elections. And I believe the very first one will be for chair of JLARC, which based on our current rules would have to come from the House Democratic, be a representative of the House Democratic JLARC members, which is Representative Berg, Fai, Frame, and Paulette. And I heard a rumor, is Representative Frame?
I am present, Mr. Chair.
Representative Frame.
Thank you, Mr. Chair. I would like to nominate Representative Jerry Paulette to serve as our next chair of the Joint Legislative Audit and Review Committee.
Excellent. Did you want to make any follow-up comments?
I'm happy to. I just didn't know if we needed a second, Mr. Chair. So if we do not.
Oh, I will second that motion.
Thank you, Mr. Chair. Well, I'm really pleased to stand up virtually and nominate our dear friend and colleague, Representative Jerry Paulette, to serve as the next chair of the Joint Legislative Audit Review Committee. I've had the pleasure of serving in the House with Jerry for 5.5 years, and on this committee just for the last year and change. And as is the case in everything that Representative Paulette does, is extraordinarily thorough, very focused on the detail and upholding the integrity of the institutions of not only JLARC, but the legislature at large. I've been thoroughly impressed as a new member of this committee, just how much energy he brings to this effort, despite his other responsibilities in the legislature, like chairing the local government committee. And I think it would be a privilege for all of us to get to serve under his tutelage. So Representative Paulette, I hope you'll accept my nomination. Thank you, everybody.
Thank you kindly.
All right. Did you have any comments, Representative Paulette, before we do a vote?
I'll, if I may, reserve comments.
Okay, that sounds excellent. And I think what we're going to try, just in the attempt to be efficient and productive, we're going to do voice votes for these nominations today. So all those in favor, please say
Mr.
aye.
Chair,
Yes.
I think you need to ask if there are any other nominees.
Oh, that is a very good legislative advice. Are there any other nominees?
See, he's very fair, Mr. Chair. Very fair.
I think he knows that nobody else wants his job. He feels very safe. Wait, did you guys know that if you're chair of JLARC, your legislative pay doubles? You guys didn't hear that? You didn't get that memo? So are there any other nominees going twice? Any other nominees going 3 times? Hearing none.
Chair, I move nominations cease.
We will close nominations. Thank you, Representative Orcutt. And with that, all those in favor of Representative Paulette taking over the chair of JLARC, please say aye.
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 All those opposed, nay. And it is unanimous. Representative Paulette. Okay, here, I am now passing you a virtual
Thank you.
gavel. I'm throwing it from Issaquah to Seattle. I hope you caught it. And with that, I will put myself on mute.
Thank you for passing me Thor's hammer and from Issaquah to Seattle. I want to start by thanking Senator Mullet, who has really set a high bar for being chair of this committee. And his work, 99% of the work of the chair is behind the scenes, and his work in ensuring that we remain probably the best legislative auditor's office in the United States under the guidance of Keenan and staff is terrific. And it takes a lot of, and Senator Mullet has really set a high bar in ensuring that the funding is there, the resources, the understanding of the work plan, and then working to bring forward our recommendations to more committee chairs with now we're sending letters to committee chairs with our reports. And I hope to build on that and ask for each of you to join in briefing your committee chairs as appropriate when we have a report that's relevant to the committee, and discussing whether or not we should have the legislative auditor staff come and brief the committee. We need to ensure that the important work we do is, I think, utilized by the full legislature and the state. This is, especially with the part-time legislature, the thing that always attracted me to serve on JLARC, and I can't remember how many years it's been, but it's been quite a few, is that this is the only place where oversight of our state agencies really happens. And this is the only place where we look at how do we ensure that the tax system is being fair when it comes to preferences. And so we have a lot of work to do, and we do this in a terrific bipartisan manner. And I hope to build on that and roll up our sleeves together. And I'll be asking all of you to join in making our work even more effective and visible for the sake of accountability and oversight and transparency in the state. Thank you. Senator Mullet, I was thinking you're the chair.
Yeah. No, and I would just like to say I've been on JLARC for 9 years and I'm not going anywhere. I'm going to stay on JLARC. I genuinely do enjoy the committee, but I do think I am proud that this committee, as the world around us has become very polarized and partisan, both at the national level and sometimes even at the local level. I think this committee's done an excellent job of staying out of that and really focused on a place where we do have common ground across the aisle, which is we want our government to work. We don't want it to waste money. And so I think this committee does an excellent job of making sure the programs we set up in the legislature are actually running as intended and are affected. And if they're wasting money, then we can shut them down. And if they're working, we keep them going. And I think we can't pass bills as JLARC. We get all this information, but it is incumbent upon the 16 members of this committee to make sure that we explain to our colleagues in legislature that aren't on this committee that, you know, these reports are nonpartisan and they're very important that we follow their guidance. And I think it's incumbent on us to make sure committee chairs and our fellow members realize the work that's being done here. And so I look forward to working with Chair Paulette in the next 2 years as we continue our good work. Excellent. And with that, I'll be quiet.
And thank you so much for the great work you've done. With that, our next step is to elect the vice chair, who will be coming from the Senate Republican JLARC members. Representative Orcutt.
Thank you, Mr. Chair. I nominate Senator Wilson.
Second.
Senator Wilson has been nominated and seconded. Thank you very much. I will ask if there are any other nominees. Any other nominees? Not hearing any other nominees. Representative Orcutt, would you like to speak to the nomination of Senator Wilson?
Thank you, Mr. Chair. You know, in the last few years, I've had a chance to serve with her on the executive committee, and I think she brings a very important perspective to it. I think her demeanor, her understanding of the legislative process, I believe she understands professional auditing, which is what JLARC does. And I've worked with Senator Wilson as she's in one of the districts nearby mine, and so we share part of a county, and so I've had a chance to work with her for a number of years, and I think she is going to continue on as a great member of the executive committee, and I believe we should elect her to this position.
Senator Wilson, would you like to say a few words now, or?
Sure, just a few quick words. I thank you, Representative Orcutt. I appreciate what you said. I do enjoy this committee. It's one of those committees that I wanted to be on from the first time I was ever elected, which was in the House. I like what the committee does. I appreciate also what Senator Mullet said about it being a bipartisan committee. I really do appreciate that. A safe place actually to have good conversation and come out with a good bipartisan result. So I do like the accountability and the oversight that this committee offers, and I would be happy to serve as the vice chair. Thank you.
Wonderful. Any other comments in support of the nomination? Then, with everyone's permission, I would like to proceed to a voice vote for Senator Wilson to be vice chair of JLARC. And all in favor of the motion, please say aye. Aye.
Aye.
Aye.
Is there anyone opposed? Is there anyone abstaining? Congratulations, Senator Wilson. I look forward to continuing to serve with you on the executive committee. You are one of the real workers and dedicated, and I love the notion. I think you really nailed it, that we've worked to make this a safe place for hard discussions. And that includes sometimes when we've had to have discussions about agencies like ESD. So thank you for your work and welcome to the vice chair position. And now the secretary will be elected out of our House Republican members. And Senator Wilson, do you have a nomination?
Thank you, Representative Paulette. Yes, I nominate Representative Ed Orcutt.
And do we have a second? I'll second.
Second.
Senator Wilson, would you like to say something on behalf of Representative Orcutt? You save all the jokes for him too.
Darn, I was trying to think of one. Yeah, I would just like to say that I have worked alongside Ed for several years. In fact, we were seat buddies, is that what we call them, on the floor of the House for the first 2 years that I was there. I really appreciate his expertise and knowledge, institutional knowledge that he has on so many areas of our legislature. And so I've appreciated working side by side with him also on this committee, and he's done a great job, and I learn from him every day. So I hope that you'll agree and we put him in as secretary.
Representative Orcutt, would you like to say anything or speak after election?
If I could speak after the vote, that'd be great. Thank you.
Great. Anyone else care to say anything in support of the nomination? In that case, the motion is to elect Representative Ed Orcutt as the secretary of the Joint Legislative Audit Review Committee. All in favor of...
Representative Paulette, did you
Yes.
call for other nominations?
Did I forget to do that?
I think so.
Are there any, thank you so much. Are there any other nominees? Are there any other nominations? Not hearing any other nominations, the motion before us is the motion to elect Representative Ed Orcutt as Secretary of JLARC. All in favor, please join me in saying aye. Aye.
Aye.
Aye.
Aye.
Are there any opposed? Please say nay. Is anyone abstaining? Congratulations, Representative Orcutt, on being elected to continue serving on the executive committee as secretary. And our fourth seat is the assistant secretary position, who is coming from the Senate Democratic members. And do we have a nomination? I would like to place a nomination, Senator Mullet in nomination to continue. He's done great service as chair, and as an incoming chair, I sure hope to be able to continue to rely on his institutional memory and hard work.
Mr. Chair, I second the nomination.
Are there any other nominations? Not hearing any other nominations. Would Senator Mullet, would you like to speak now or hold?
I said
Please.
my comments earlier, so I'm not going to speak now, or I won't even speak after the vote. I will be quiet.
Would anyone else like to say anything? I am very pleased. Thank you very much for being willing to continue to serve, Senator Mullet. And with that, we will proceed to a voice vote on the motion for Senator Mullet to be the Assistant Secretary. All in favor of the motion, please join me in saying aye. Aye.
Aye.
Aye.
Any opposed? Any abstentions? Not hearing any, then Senator Mullet has been elected for a term as Assistant Secretary, and congratulations and thank you very much. And I need to check in with you about that doubling of salary. I think that we may need to ask the legislative auditor to review that. With that, we have a reconvened executive committee, and I just want to thank the members of the executive committee for serving. It's behind the scenes work, and it means a lot for the accountability and transparency and work of the state legislature. So along with all the members, because I think that all of you do a lot of work, a lot of reading, a lot of participation and extra hours that just is hidden pretty much from public view for the work we do here. And I really appreciate your willingness to serve. Senator Hasegawa, you had your hand up?
Yeah, thanks, Mr. Chair. I'm just curious, is the executive committee statutory or in the committee rules, or how are they formed, I guess? Just curious.
Let me ask if the legislative auditor can respond to that.
Yes, thank you, Representative Paulette. And Senator Hasegawa, yes, the establishment of the executive committee is in statute. So, and it is statutorily required to be representing all four of the caucuses, and the rotation of the chairmanship is spelled out in statute as well.
Yeah, thank you.
Any other questions or comments? If not, then we will go to the next item in our agenda. And click to return to. Page 1 of expanded agenda.
Mr. Chair, I think Representative Orcutt has a question.
Representative Orcutt, please.
Mr. Chair, I was just going to help you with the next item, which was to make a motion to approve the June 15th, 2021 minutes.
Thank you. Please make the motion?
So moved.
Second.
Second. It has been moved and seconded to approve the minutes. We will do so by voice vote unless anyone has an objection to doing so. Not hearing an objection. All in favor of adoption of the minutes, please say aye.
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 Is there anyone opposed to adoption of the minutes? Do we have any abstentions? By your vote, the minutes are adopted. Thank you. And our next item is a technical correction in our biennial work plan. And Valerie will be presenting that. And Eric, please, you have a question or correction for me?
I am truly sorry about that. It was an accident.
No problem. Okay. Valerie, do you want to present?
Sure. Good morning, Chair Paulette and members of the committee. I'm Valerie Whitener, staff to the committee. And at the June meeting, we presented and you adopted the 2021-23 JLARC Biennial Work Plan. And about 3 days after you did that, the team that is assigned to the study regarding the Department of Natural Resources in Geneva, can you move to the second page, please, of the work plan? Looking at the long-term forest health planning and sustainable harvest approach, notice that I had a typographical error on that, and I do apologize. I had originally had December 2023 and changed it to January, but neglected to update the year to 2024. And so the team noticed that all of a sudden they had lost 12 months of time to do analysis, which is not good. So before you is a technical correction to the work plan for your consideration. Thank you.
Are there any questions for Valerie? Representative Orcutt.
Mr. Chair, I move that we approve the technical correction to the work plan.
Second.
Second.
Any further discussion on the technical correction? In that case, we will move to a voice vote rather than a roll call once again. And all in favor of the technical correction to the biennial work plan, please say aye. Aye.
Aye. Aye.
Any opposed, please say nay. Any abstentions? I did just realize that I've gotten out of practice in doing voice votes and that I am supposed to ask for you to, for all of us to say your name and aye or nay. So I will do that for any future voice votes on Zoom. So by your vote, the biennial work plan has been updated and corrected. And we will now move to our discussion of the lodging tax expenditures as we move into our presentations and reports on tax expenditures. So Ashley is presenting on the lodging tax expenditure update.
Good morning, Mr. Chair, members of the committee. My name is Ashley Elliott, and I'm here this morning to present our 2020 update to the Lodging Tax Expenditures report. And just as a reminder, the Lodging Tax report is not an audit nor an evaluation. It is a product of ongoing data collection. And this presentation provides background and an update on this year's information. So lodging municipalities may collect a tax for lodging stays at hotels, motels, and similar facilities. And in this instance, municipalities mean cities, towns, and county governments. Lodging tax was first introduced in King County in 1967, and over time, allowable expenditures were expanded to include all tourism-related activities. In 2007, the legislature clarified the types of activities that could be funded by lodging tax revenue. And in 2013, the legislature required municipalities to report information about their expenditures to JLARC. Municipalities may distribute funds locally and report this data to JLARC. Municipalities may use lodging tax revenue to fund tourism-related activities such as events and festivals, marketing and promotion, and tourism-related facilities expenses. They may also distribute grants locally to organizations and report these activities to JLARC. And statute requires that municipalities report expenditure data to JLARC, and JLARC provides guidance to municipalities about the data reporting process, but we were not directed to verify or evaluate the data that is reported to us. In 2020, 181 municipalities reported spending $55.9 million in lodging tax revenue. This funded 1,215 tourism-related activities. Of these, about 78% were affected by the public health crisis in 2020. Municipalities reported that 44.4 million people attended these events and paid for 7.9 million lodging nights. 95% of the municipalities that received lodging tax distribution reported to JLARC in 2020. And just for comparison, here are 2019's numbers. And we would like to thank the Association of Washington Cities and the Washington Association of Counties for their help with outreach to municipalities. And as shown on the previous slide, paid lodging nights did decrease in 2020. You can see that over time they've grown and kind of steadied over the last several years, and there was a significant drop in those paid lodging nights for 2020. And the same thing happened for attendees who did not pay for overnight lodging. You see some growth and then a significant drop again in 2020. And the same thing is for attendees who paid for overnight lodging. Again, we have some steady growth and then a significant drop in the 2020 reporting.
Before you move to the next slide, Senator Mullet has a question, and I know someone else has a question as well, it looked like. Senator Wagner. So, Senator Mullet.
Thank you, Ashley. I don't know if it's a question for you or for Keenan. The committee that I serve on, or that I chair with Senator Wilson in the Senate, the Finance Committee, also has tourism under its umbrella. And we're trying to determine of the lodging tax dollars, like what portion is targeting in-state tourism, like to get people from Issaquah to go to Chelan, and which portion is targeting people like in Montana, Idaho, Oregon, California to come to Washington. And so what would we need to do as we gather this data each year to try to get more clarity of which portion of these dollars are geared towards getting people from out of state to come here versus people in state just to travel within the state? Does that make sense?
That's a great question. So for lodging tax, this data does collect some information on where people came from. So whether it's 50 miles away from the event, or we even do have an out of state, out of country option for attendees. So we have a rough idea about how many people are being attracted by each event from those locations. But we don't have more detailed information on that subject for this data.
You know off the top of your head what portion was from out of state or out of country? It's hard to say.
I don't know off the top of my head, but I can look and get you those numbers.
Okay. Yeah, and just to add to that, Senator, I don't know if we have information about how they targeted it, but definitely we can show you the breakdown in the attendance in terms of where the reporting where and how far they came from.
Okay.
And we can send that around to everybody.
Senator Wagner?
Thank you, Mr. Chair. Ashley, 95% reporting is pretty good, but do we have a feel for the 5% that aren't reporting, whether it's just a technical difficulty, or is there a reason why that's consistently 5% not reporting that you know of?
That also a great question. We have not been able to reach it's about 10 every year that we don't hear from. It does change from year to year, and we're just not able to get them to respond to us. We do a lot of outreach with the associations to help, but every year, the last couple of years, there seems to be about 10 municipalities that we just don't hear from.
Thank you.
And again, Senator, we'd be glad to send a list of those around to everybody so that they have that information available if they like.
Senator Hasagawa and then Representative Fye.
Yeah, thanks, Mr. Chair. So I'm just trying to wrap my head around the different criteria and how for the different lines, charts, and how they rationalize against the slopes that are indicated there. So I understand attendees who did not pay for overnight lodging are probably local attendees to conferences or conventions around that are just staying at home. Is that right?
They can also be like if you attended an event out of town and stayed with a family member or a friend. So it's not just local. It can also be people from out of the area, but they're not paying for lodging. So either they're leaving and going home, staying with someone, or they're local.
Okay, thanks. And then, so what's the difference between attendees who paid for overnight lodging and paid lodging nights?
So you might have like a family who attends an event, but they all stayed in the same hotel room. So they're not paying for multiple lodging nights. They're not taking up multiple like rooms in lodging facilities. So
okay, that's
where they vary.
So, Mr. Chair, if I could just ask one more clarifying question. So I'm trying to rationalize the attendees who did not pay for seem to increase pretty significantly over 2016 and 17, dropped in 18, and then up again in 19. So is that related to family stays, you're saying?
It could be. Unfortunately, we don't have a lot of information about why people maybe made the choice that they made. So we have the attendee numbers, and those can also vary depending on how well the data is collected at each individual activity. So there's a lot of variation in how those numbers are reported, which could account for some of this up and down that we see.
So you'll be issuing a final report and you'll incorporate some interpretation of these numbers in that final report?
So we actually don't provide interpretation for the lodging tax. It's just a data collection, and all of this information is available. We also, municipalities also do make comments that are available in the report. But these are just aggregate numbers that we're providing here. I can look into the information to see if there might be some explanation for that variation for you. But this is kind of the extent of what JLARC does on this
I see.
area.
So, Mr. Chair, if I may make a comment that the data, while it's interesting, is meaningless without some sort of interpretation of what it means. So I don't know where we go with this or what we're doing with it, but it's an interesting presentation, I guess.
Senator, that might be something that a small proviso or something to add to our work plan to have staff do further analysis with municipalities might be of use. So you might want to think about following up on that. Good point. And Representative Fye, and I think then we have to move on because we're falling behind time to get to the tax preference reviews.
Thank you, Mr. Chair. Can staff remind me, I recall from the previous presentations we've had on this before, there is some special circumstances with King County, either in terms of the use or the reporting. Can staff remind us what that is?
Yes, so King County actually does not report their lodging tax revenue. There is a proviso in the lodging tax law, and it has to do with the population of King County. I'm sorry, I don't have the exact numbers, but they exceed the population requirements to report their lodging tax. And their lodging tax had, I believe, some statutory things that it had to go to for a while. I know it went to the Kingdom. There was some stuff like that. I apologize. I don't have it totally memorized off the top of my head, but I will get the exact language to you.
So then if I can follow up, Mr. Chair. So this picture here is without King County.
Correct.
Is there so it's kind of, I guess I go back to Senator Hasagawa's question. It's kind of entertaining, but only a little bit to get this information if it excludes King County, at least knowing what's going on. I mean, it's got to be a high percentage of what those overnight stays are. So just make that note, Mr. Chair.
I would ask in updating this that especially the presentation should note, April, that this is without King County. And Senator Mullet, did you have a clarification?
Well, for Representative Fye, I was going to say, because I looked into this on my committee, was there the convention center does have bonds that these lodging taxes do go to pay off some of the convention center bonds. So it makes it very tricky of how you tweak the lodging tax formula, because some of the King County lodging taxes are already been obligated to debt service. But and I think that makes it complicated. But some cities, I think within King County, like I know Issaquah has its own lodging tax, so it's part of King County, and I think it's included in these numbers. So I think there's a slight split, because you are getting information within King County who aren't. There's cities I represent in King County that have the lodging bill.
All right, let's finish this briefing so we can get to our tax performance reviews.
Yeah, I'm going to just walk you through one of our interactive dashboards for this report. This report, similar to some of our other ones, has this data interactively. I'm going to specifically look at this activity-specific data. So I'm going to just navigate to that dashboard. These are laid out similarly. Your filters are over here in the yellow, and all of these dashboards are defaulted to display all of the data we've collected since 2014. So I'm just going to select the correct year that I want to display and apply that filter. I could also filter by activity type, municipality, if I wanted to look at a specific set of municipalities or just one. And this year we added this affected by the public health crisis of 2020. You might see some of these yellow highlighted areas, and those are fields that were left blank by the municipalities. They might have left reasons about why they left those blanks or some explanation, and that is available here under our Download the Data tab. And that is all of the information we've collected since 2014 when we took over the data section. And that concludes my presentation. I'm happy to try and answer any other questions.
Thank you very much, Ashley. I would just ask, you might want to clarify on the slide about who's included in that data. We may have further follow-up with a suggestion from Senator Hasagawa. With that, let's turn to the 2021 tax preference performance reviews. And we've got 7 tax preference performance reviews to go through. And what I think I'd like to ask is to hold questions until each item has been presented. So not to hold till all 7, but hold your questions until staff has gone through a particular tax preference.
Eric, can you see the screen?
Yes.
All right.
Good morning, Mr. Chair, members of the committee. Eric Thomas, staff to JLARC. With me are my colleagues Scott Hancock, Josh Karras, Dana Lynn, Rachel Murata, Pete Van Morsel, and Eric Whitaker. And we are presenting JLARC's preliminary report of the 2021 tax preference performance reviews, in which the legislative auditor recommends action on 4 of 7 preferences. Prior to discussing the findings from these reviews, I'd like to briefly remind you of some of the differences between JLARC's work reviewing tax preferences and our other performance audit work. Well, the process itself is different. Our work follows the same audit standards that require the work to be conducted independently and that the findings are based on evidence. The biggest difference between our other audit work and tax work is the involvement of the Citizen Commission for the Performance Measurement of Tax Preferences. This is a 5-member body that the legislature created that has appointees from each of the 4 caucuses in the governor's office. And the commission determines our review schedule. By statute, we're charged to review all preferences over a 10-year period. We have approximately 700 preferences, so they sequence and prioritize those reviews based on industry groupings, when preferences are set to expire, and specific direction from the legislature. And finally, one other difference between our regular work and the tax preference work is that the commission takes public testimony on each of these preferences, and based on that testimony, as well as the staff work, adapts comments that are submitted to you along with our final report. Statute directs JLARC to address 5 key areas in its reviews. First among these is the public policy objective. What was it that the legislature intended for a preference to achieve, and is it actually occurring? Second is the beneficiaries, who's affected and what are their savings. When we talk about savings, we talk about what an entity would have paid with the preference versus what they would have paid in the absence of that. Third, for economic development preferences, what are the revenue and economic impacts to taxpayers and the government? Fourth, looking to other states, do other states offer similar preferences? And finally, again, unlike JLARC's other work, we are specifically required to make a recommendation to the legislature to continue, terminate, or modify a preference. As I mentioned, we reviewed 7 preferences this year and recommend action on 4 of these. Recommend allowing 1 to expire and clarifying the intent of another. And want to update you on 1 preference that we expedited to complete prior to the 2021 session, and you've already implemented the recommendation. And also just remind you that all reports have a 1-page overview as well as a short video that's typically between 90 seconds and 2 minutes to give you a brief highlight of the report's findings. With that, I will hand it over to Dana.
Thanks, Eric. Good morning, everyone. I'm Dana Lynn, staff with the committee. The first tax preference we'll discuss today is a B&O tax exemption for the health benefit exchange. This was enacted in 2013 and is scheduled to expire July 1st, 2023. The estimated beneficiary savings in the current biennium is $2.2 million. The legislative auditor concluded that the preference reduces the exchange's administrative costs by about $1 million a year, which allows it to maximize its funding to operate a health insurance marketplace. The legislature should extend the expiration date or make the preference permanent. As I noted, this is an exemption from B&O tax for all of the income that's received by the health benefit exchange. The exchange was established to help implement the Affordable Care Act in Washington state. It provides, among other things, an online marketplace for individuals and families to compare and enroll in health plans. And it's structured as a public-private partnership, funded fully by appropriations that are made by the legislature. And I'll note, without this tax preference, it would be subject to B&O tax. we found the preference is meeting the inferred objective, and that is to allow the exchange to maximize its total state funding. This particular preference was enacted when the legislature created the governance and funding mechanisms for the exchange, so it serves a structural purpose. And it does reduce the exchange's administrative costs by about $1 million each year, or about 2% of its total state funding. Since the exchange was created, the uninsured rate in Washington state has been at least 3 percentage points below the US average. And since 2015, at least 1.6 million Washington residents have used the exchange annually to enroll either in qualified private health plans or in Washington's Medicaid program, Apple Health. The legislative auditor recommends that the legislature extend the July 2023 expiration date or make the preference permanent, and also that you add a performance statement to specify the public policy objective for the preference. He also recommends the Citizen Commission consider if the preference is critical to the tax structure and if it is, exclude it from future reviews. The next tax preference that we'll cover.
Hold on one second, Dana. I didn't realize that was your final slide there. And I believe Representative Frame had a question.
I do, Mr. Chair. Thank you so much. So, Dana, that term, it's a structural preference, has got my attention. And I heard what you just said there, that it needs to be evaluated for whether or not it's critical to the tax structure. Can you tell me a little bit more about that language? And if you have a ballpark, like how many, I mean, the last report we were at 748 preferences. I know it's more now. How many of our 700 plus preferences have been given that structural description? Anything else?
That's a great question, Representative Frame. That is something that we have identified as we've reviewed several of these, and we've determined these were kind of set up to allow the a tax to work a certain way or something like that. We could get you that information, send it out to all members to provide that, because it is something that we have identified, and we've actually kind of structured our review, 10-year review cycle to put some of those that we've determined are structural in nature kind of in a lower category of review, because we've determined they're not taxed under B&O tax, they're taxed under this other tax or things like that. We'd be happy to get that to you.
That would be wonderful. And I know there's several of us on this group that are also on the tax structure work group, as in we're thinking about even like alternatives to the B&O tax, ones that you all have determined are structural that should be retained no matter what our business taxation method is something I would be interested in hearing from our legislative auditors. So thank you so much, Dana. I'm looking forward to seeing.
Thanks.
And Representative Pollack, can I add something to that? And just to clarify, Representative Frame, it's a provision in the statute for that designation, and so the Citizen Commission is the one who has the authority to weigh in with a decision on that. So we provide some recommendations to that, but they go through a process of whether they make that determination or not at their judgment. So, but we can, like Dana said, we'll be able to give you a list of all the ones that they to date have provided that designation on.
Thanks, Keenan. That's great.
Senator Hasagawa.
Well, thanks, Mr. Chair. I was just going to hold my question. It's more of a comment on the overall scope of the tax preferences, but I guess I could make it now because we, with the passage of Senate Bill 5405 last session that has JLARC incorporating racial equity analysis into its audits. I'm hoping that we could work together to figure out how they also apply to these audits, because I don't think the Citizens Commission's recommendations or reviews of tax preferences was exempted from that analysis. So just making that comment. Thank you.
All right. Keenan, do you want to say anything about whether your current plan includes applying the criteria that you're developing for doing equity analyses on.
Sure.
Taxes?
Yes, and I would agree with Senator that I think this assignment in 5405 is to all of our performance audit work. These are performance audits too. So to the extent we are able to give insights into racial equity issues on tax preferences, we will take that up as well as we will attempt on other ones.
I think certainly we can easily see that there are many instances where a tax structure might have clear disparate impacts. So I think we have a lot of work to do here. With that, let's move to our next item, which is the manufacturer's deferral of taxes.
Correct, Representative. Dana Lynn again. I'm joined by my colleague Pete Van Moorsel. This is a sales and use tax deferral program for certain manufacturers. It was established in 2015 and is scheduled to expire January 1st, 2026. We estimate the beneficiary savings in the upcoming biennium to be between $240,000 and $380,000. And the legislative auditor concluded 4 businesses have used the deferral and met their job goals through temporary construction work rather than permanent manufacturing jobs. Businesses likely would have built facilities without the deferral, and to increase manufacturing jobs or training, the legislature should consider modifying the deferral program. This program allows businesses to apply to the Department of Revenue, and if they are accepted, they can defer up to sales and use tax on up to $10 million in expenditures that they make to build, expand, or remodel their manufacturing facilities or to buy manufacturing machinery and equipment. Since 2018, the program has been open to 2 businesses a year, one of which has to be in Eastern Washington and one in Western. And once the businesses have completed their construction, they have 5 years with no payments that they will make on the deferred taxes. After that 5 years is up, they repay the deferrals over a 10-year period in equal installments. And the state portion of those repayments goes into a earmarked fund, the Invest in Washington account, that is specifically set up to fund job training for manufacturing occupations. It is administered by the State Board for Community and Technical Colleges.
Good morning, Mr. Chair, members of the committee, Pete Van Moorsel, staff to JLARC. 4 businesses have claimed the deferral and filed an annual tax performance report. And these businesses comprise 2 on the west side in Maltby and in Frederickson, and 2 on the east side in Spokane and Walla Walla. And these businesses manufacture products ranging from dump truck parts and concrete products to agricultural inputs and wine. Together, the 4 businesses have deferred $1.3 million in state sales and use taxes. And JLARC staff estimate that this represents 18% of the maximum amount of the sales tax that could have been deferred if all the available deferral slots had been claimed, and each deferral was for the maximum allowable $10 million in eligible expenses. The legislature set a goal that each deferral project generate at least 20 full-time jobs, and defined these jobs to include temporary construction jobs used to build the facilities, as well as permanent full-time jobs at the facility within 1 year of its completion. All 4 businesses met the job goal through temporary construction work, and none reported creating 20 full-time manufacturing jobs at the facility. The change in full-time manufacturing jobs reported by the businesses ranges from a reduction in 7 jobs to an increase in 6 jobs. Further, JLARC staff used an economic modeling tool to estimate that the construction spending at the facilities supported an additional 122 non-construction jobs. All 4 businesses report that they likely would have built the facilities even without the deferral, but they did add that the deferral allowed them to build earlier, to complete more construction, to plan for future growth, and to spread over several years the sales tax liability that would otherwise have been due at the time of construction.
Finally, we found that there have been no impacts yet on job training programs. We calculate the first repayments will be due by the end of this year. And if all the businesses repay their full amounts on time, the repayments are estimated to peak at $325,000 in 2031. The State Board for Community and Technical Colleges reported to us that they're developing plans to use this anticipated funding. The legislative auditor recommends that you extend the expiration date on this program and modify it because each business has met the legislative goal of creating 20 full-time jobs, and repayment of the deferred taxes is expected to fund future training. However, if the legislature wants to encourage businesses to create and retain more manufacturing jobs, it could modify the preference to focus on creating more full-time manufacturing jobs, not temporary construction work, and to directly appropriate money to the State Board for Community and Technical Colleges for providing manufacturing training apprenticeships. I'll pause here.
Thank you, Dana. Are there any questions? I have a very quick one, which is I'm assuming from after looking at the report that the statute doesn't direct that the apprenticeship training money be used by the state board in the community college district or technical college district that the business was in, correct?
That is correct. There is no stipulation of where those monies be used.
Okay. So it makes it very difficult, I think, for the state board to set up a manufacturing training or apprenticeship program with this kind of variable money. Any other questions? Thank you. Let's proceed to medical cannabis. Oh, newspaper. Sorry.
Good morning, Mr. Chair and members of the committee. My name is Eric Whitaker. I'm staff to the committee. The next review we'll discuss is a preferential B&O tax rate for businesses that print or publish newspapers. And the legislative auditor concluded that the preference is providing tax relief for the newspaper industry, but that newspapers continue to lose revenue and jobs as they seek to stabilize financially. The preference is currently scheduled to expire July 1, 2024, and we estimate that the beneficiary savings in the current biennium are $823,000. In 2008, the legislature updated the statutory definition of newspaper to include electronic versions of qualifying print publications. And prior to that change, print ad revenue was subject to a lower B&O tax rate than digital ad revenue. For a newspaper producing both print and digital versions, this meant that ad revenue had to be separated out and different tax rates applied. As stakeholders testified at the time, ad buys often bundle print and digital, thereby making it difficult to differentiate revenue streams and apply different tax rates. And after that definitional change, digital-only newspapers continue to be taxed at a higher B&O tax rate. The following year, the legislature created the preference, reducing the B&O rate paid by newspaper printers and publishers. And this was in response to multiple years of declining revenue across the industry and the closure of some newspapers in Washington. The chart below shows the two B&O tax rates paid by newspapers over the last 12 years, and this is based on their categorization, either a print publication or a digital-only publication. And the legislature last modified this preference in 2015 when it extended the expiration date and added a performance statement. In doing so, the legislature identified two objectives. First, to provide tax relief to the newspaper industry while it adjusts to revenue losses and technological change. And two, to provide a permanent uniform tax rate for revenues derived from different sources. The legislature also directed JLARC to evaluate year-to-year change in gross revenues for newspaper businesses claiming the preference. And if the three most recent years show growth, the intent is to let the preference expire. In our review, we found that 164 unique beneficiaries claimed the preferential rate since its extension in 2015. And since that time, the aggregate value of the preference has decreased, and the number of businesses claiming the preferential rate has declined in 4 of the last 5 years. Newspaper printers and publishers account for 2/3 of all beneficiaries, with non-newspaper beneficiaries including some chain supermarkets, advertising agencies, and commercial printers. And this results from the statutory definition that focuses on form and frequency rather than on content. And so, for example, focusing on the frequency of publication or the materials used in creating the newspaper minimizes the risk of running afoul of United States Supreme Court decisions that bar different tax treatment based on content. We used Department of Revenue tax return detail to assess annual gross revenues and found that among newspapers claiming the preference, revenue fell by $136 million, or about 29% between 2015 and 2020. And this represents an average annual loss of about $27 million each year. We also used ESD records to look at newspaper employment between 2015 and 2019. And over this time, employment at beneficiary newspapers also fell by 1,126 jobs, or about 38%. And despite the revenue losses and downsizing, newspapers in Washington are pursuing non-traditional funding sources. And so, for example, the Seattle Times has partnered with local entities such as the Seattle Foundation to help fund news gathering operations. The Spokesman Review is one of a few local newspapers working to secure funding to create endowment-funded reporting positions. And McClatchy-owned newspapers in Washington have partnered with Report for America to add reporting positions focusing on specific communities. And all four of the McClatchy-owned papers in Washington recently launched funding drives to raise tax-deductible donations to help finance those positions. And at this point, it's too early to tell whether these and other funding approaches mentioned in our report will be successful long-term or if they'll be adopted more widely. If the legislature wants to consider assistance beyond tax policy, other jurisdictions may serve as a model for Washington. For example, a couple of states are exploring ways to assist the news industry, not just newspaper printers and publishers. Both New Jersey and Colorado use grant funding rather than tax preferences so that media organizations can do such things as train journalists, foster collaboration across newsrooms, and enhance community engagement and civic participation. There are also various efforts that have been introduced in Congress in recent years. So, for example, one bill proposed giving newspapers the same tax status as nonprofits, and another sought to create a panel to identify mechanisms for public funding of news organizations. And to date, these bills have not passed, but considering these efforts at both the state and the federal level and the industry's continued transition to digital products, a tax preference based on the production of a physical newspaper may be of diminishing utility for the industry going forward. The legislature should review the preference to determine if it provides sufficient relief to the newspaper industry and whether additional assistance is needed as these businesses attempt to stabilize financially. The preference has been in place for 12 years, but the industry continues to lose revenue and jobs. If the legislature is interested in helping the news industry more broadly, it should consider additional approaches.
Questions or comments? Eric, since the initiation of the preference, which included concern over tax preference based on content, did the review include any update of whether or not court decisions have changed the outlook of whether or not this could be targeted more closely to what we normally consider to be publication of news and news gathering organizations?
That is not something that we looked at specifically in the field work and in the report itself. We did hear from the Department of Revenue during the technical review process that court decision is still sort of the, and I'm going to draw a blank on the name of the court decision off the top of my head, but it is mentioned in our report. But the Department of Revenue still pointed to that court case as the rationale behind the tax preference in not being able to make those decisions based on content.
Thank you.
Sure.
Any other questions for Eric? All right. Seems like we've got work to do here. Let's go to medical cannabis.
Good morning, Chair Poet. Are you able to hear me?
Yes.
Great. Good morning, members of the committee. I'm Scott Hancock. I'm here to present our review of 7 medical cannabis tax preferences. The preferences were created in 2015 and have no expiration date. The estimated beneficiary savings for the 2021-2023 biennium are $4.9 million. The legislative auditor's conclusion is that the preferences provide tax relief to patients and cooperatives. After 2019 statutory changes, it is unclear how pending taxpayer guidance may affect beneficiary savings. Again, there are 7 preferences for medical cannabis. The preferences differ by which products, retailers, and customers are eligible. There are 6 sales and use tax preferences and 1 B&O tax preference. There are 3 preferences for cooperatives. There are 3 preferences for cooperatives and their members. And while there are no exchanges of goods or services for currency within a cooperative, some activities are technically taxable without these preferences because of the transfer of ownership of resources. These are sales and use tax preferences. I emphasize the use tax element there because it covers these instances where there might not necessarily be a monetary exchange occurring in Washington. So the preferences for cooperatives exist to ensure that the appropriate activities within cooperatives are not taxed. The stated objective of these preferences is to reduce tax burdens on medical cannabis patients. Medically endorsed retailers are required in some way for 6 of the 7 preferences. Retailers with this endorsement register patients and designated providers into the patient database. They issue recognition cards and they make exempt sales. The map displayed on the screen now shows that medically endorsed retailers are available in 32 of 39 counties. In fiscal year 2020, Washington had 510 licensed retailers, of which 275 had medical endorsements. And of those 275 medically endorsed stores, 205 of them made exempt sales. Recognition cards were issued by 188 retailers in 29 counties in fiscal year 2020. The availability of these retailers may limit use of the preferences. A statutory change in 2019 may affect future beneficiary savings. In fiscal year 2020, more than 87% of beneficiary savings were realized under 1 of the 7 tax preferences. This preference was modified in 2019 in Engrossed Substitute Senate Bill 5298. And the modification made the preference refer specifically to DOH compliant products. However, there is yet to be any change to administrative code or in guidance to taxpayers. The Department of Health and the Department of Revenue have told us that they are working on updates to administrative code and to guidance to taxpayers and businesses. Because this work is not yet complete, the effect of these revisions are uncertain. And wanted to note here that we mentioned in the report that in fiscal year 2020, less than 1% of beneficiary savings for this preference were from purchases identified as DOH compliant products. And the beneficiary savings from these purchases were approximately $7,000. The legislative auditor recommends that the preferences are continued because they achieve the objective of providing tax relief to medical cannabis patients. The Department of Revenue and the Department of Health should update guidance to reflect the 2019 statutory changes. That concludes the presentation for this review of preferences. I'm happy to answer any of your questions.
Questions? The DOH guidance, did they say when they would have updated guidance?
They have not provided us a specific date. My understanding is that they're still reviewing the statutory language and how that might affect the preference and whether there's a need to update the guidance to better reflect what the change in the statute is referring to when it mentions DOH compliant products. So The DOH may undertake a rulemaking to change the administrative code that defines the term DOH compliant product.
And Chair Paulette, if I might, we intend to also, like we do with Department of Revenue and OFM on these tax preferences, to ask DOH if they would like to respond to the report. So that's an opportunity for them to provide some more specifics.
Any further questions or comments from committee members? All right, let's go to dialysis.
Great. Thank you. This next preference review is a property tax exemption for nonprofit outpatient dialysis facilities. The preference has no scheduled expiration date and an estimated beneficiary savings of $4.2 million in the 2021-2023 biennium. The legislative auditor's conclusion is that the preference provides tax relief to nonprofit outpatient dialysis facilities, which outperform their for-profit counterparts on 2 standard measures. The legislature should clarify the intent of the preference. Again, the preference is a property tax exemption for nonprofit outpatient dialysis facilities. The exempted property is both real and personal property used exclusively by nonprofits for outpatient dialysis treatment. Beneficiaries must recertify their exemption each year with the Department of Revenue. We found that there are 27 facilities in 7 counties that are benefiting from the preference. As you can see, all 7 counties are in Western Washington. The intent of the preference is unclear. There is no explicit policy objective in statute. So to infer an objective, we looked at the legislative history. And testimony during consideration of the bill that created this preference made comparisons to the property tax exemption for nonprofit hospitals, which has an intent to support charity care. However, unlike nonprofit hospitals, nonprofit outpatient dialysis facilities are not required to provide charity care. Additionally, over 99% of treatments at outpatient dialysis facilities are for patients with end-stage renal disease. Medicare and the state's kidney disease program provide coverage for people diagnosed with end-stage renal disease. So with these programs in place, we concluded that support for charity care is not a relevant objective for this preference. We compared beneficiaries to their for-profit counterparts on several standard measures of dialysis facilities, and we found that beneficiaries outperformed on 2 measures. First, beneficiaries had a greater share of patients on the transplant waitlist, 16.3% versus 12.2%. And second, beneficiaries collected less revenue per treatment, $397 versus $480. And on all other standard measures, beneficiaries and their for-profit counterparts performed similarly. This brings me to the legislative auditor's recommendation, which is that the legislature should clarify the objectives of the preference by including a performance statement. This brings me to the end of this presentation, and again, I'm happy to answer any questions you may have.
Senator Wagner.
Thank you, Mr. Chair. When you were working on this analysis, did you discover any reasons why this seems to be west side of the mountain centric?
There are a few reasons that contribute to where nonprofit outpatient dialysis facilities may be located. They are disproportionately located in Western Washington, and so they are disproportionately, or the nonprofits are the only ones eligible for the preference. So that geographic distribution is reflected in who is a beneficiary. Outpatient dialysis facilities first will have to choose to locate in those areas. And second, there is a administrative process that outpatient dialysis facilities have to go through called Certificate of Need with the Department of Health. So the Department of Health has to determine if there is a need for an additional facility of this type in the area. We've talked to some of the facilities, both nonprofit and for-profit, and some of the reasons that they provided to us are that they like to be located next to other facilities of a similar type that they collectively manage. So providers of one type that have multiple facilities like to be located near one another in order to share resources such as employees or other tangible assets. Sometimes facilities will have a relationship with nonprofit hospitals, and so they tend to be located near one another as well.
Any other questions? All right, thank you. And let's go to solar energy.
Good morning, Chair Paulette, members of the committee. My name is Rachel Murata. I'm staff to JLARC, and I'll be joined by Josh Karras and Eric Whitaker to talk to you about a public utility tax credit for payments made through renewable energy programs. The legislative auditor concluded that this tax credit program increased Washington's solar capacity and met its solar-related employment target. It did not broaden low-income participation, and solar installations have continued after the program reached its funding limit. The program is scheduled to expire in June of 2030. However, at this time, the program is closed to new participants. And we estimate the beneficiary savings will be $27.4 million this biennium. Under the Renewable Energy System Incentive Program, or RECIP, customers of participating utilities can install renewable energy systems like solar panels or wind turbines and start generating electricity. The utilities then pay those customers based on the amount of electricity they generate multiplied by a rate that's set in statute. And then the state reimburses the utilities with a tax credit for the amount that they've paid. There are limits on the amount of incentive for individual systems and for utilities as a whole, as well as an overall limit of $100 million for the program. In 2017, when the credit was last modified, the legislature noted two specific solar-related metrics for JLARC to measure the credit. They directed us to measure whether 115 megawatts of solar capacity were installed and whether there was an increase in solar-related employment. And that could be either in the number of jobs or in the state's ranking for jobs or jobs per capita nationally. The legislature also noted that they intended to use community solar to help broaden participation by low-income individuals and others who may not own property for solar panels to be installed on. Community solar is a model that allows individuals to group together to fund a solar project and share the financial benefit. So as I noted, the program was scheduled to be open to new participants until June of this year. But by February 2019, that $100 million funding limit had been reached. And so from that point on, all future applicants were placed on a wait list. During the time the program was open, 100 megawatts of solar capacity were installed, which is 87% of the 100 megawatt or 115 megawatt target that the legislature set. So we identified a few possible reasons for that. The program includes about 7,500 solar energy systems. 202 of those, plus 3 anaerobic digesters, were actually installed before the program began. So those systems were eligible for the program, but don't count towards the 115 megawatt target. We also noted that the incentive rates set in statute range from 5 up to 21 cents per kilowatt hour. And the rates are higher for systems that were installed in the first year, systems that are smaller or community solar, and systems that include component parts that were made in Washington. So if the legislature was expecting fewer of those types of systems to be installed, that would have resulted in lower program costs. During the time the incentive or the program was open to new participants, the solar employment target was met. So the state added about 1,500 solar related jobs, which is about a 52% increase in jobs per capita. And the state's ranking nationally remained 21st for jobs. Go ahead, Eric, or Josh.
Hi, Joshua Karras, staff to the committee.
We use spatial analysis to identify areas where eligible participants were more likely to install systems. Counties east of the Cascades have 21% of the state's homeowners and 26% of the systems installed with the preference. We also found that systems east of the Cascades were 12% larger than systems west of the Cascades, and that on average, the panels produce 16% more energy. We also compared systems built through the program in urban and rural areas. Rural areas of Washington have roughly 12% of the state's homeowners and 15% of the systems installed with the preference. Systems installed in these rural areas were 15% larger than systems installed in urban areas. We use an adoption model developed by the National Renewable Energy Laboratory to estimate the impact the credit may have had on solar installations. These models simulate how the solar market responds to various policy variables, like incentive rates or electricity prices, while taking into account a resident's building characteristics and willingness to adopt the technology. By comparing the results of the model with and without the credit, we found that participants may have installed solar earlier than they would have without it. The model results only showed a 12% temporary increase in installations while the credit was in place. After 10 years, roughly the same number of systems were installed with and without the preference. We also found that systems were 32% larger with the incentive in place than without it. Because the incentive pays for the same rate for systems up to 12 kilowatts, it encourages owners to buy a larger system.
The program did not meet the legislature's intent of broadening low-income participation. So we used solar loan data from the Department of Commerce to review the income of homeowners borrowing money to install solar energy systems. And the borrowers earned an average of 180% of the county median in their areas, and the average income increased by about $22,000 between 2015 and 2020. Community solar projects were intended to help broaden access for those who don't own property for systems to be installed on, but these projects make up less than 2% of the installed capacity through the program. The benefits of community solar are different than the benefits of owning your own system. So specifically, the financial benefits for participants ends when the project term ends. And currently, community solar project terms range from 8 to 25 years. We use data from 15 utilities across Washington on participants in a separate renewable energy program, which did not end when the RECIP funding was, when RECIP reached its funding limit. Among the utilities, installations in solar energy systems have continued after the initial decline when the limit was reached, and December 2020 was the 4th highest month for new installations since 2015. According to the Solar Foundation's annual solar jobs census, solar-related employment declined in Washington in 2020 by 216 jobs, or by about 6%. However, the state's ranking for jobs and also jobs per capita both improved, suggesting that our decline was less than in other states. A solar panel manufacturer in Bellingham that testified for RECIP in 2017 reported that it needed the Made in Washington bonus to remain competitive as it sought to expand its market outside of Washington. The company reports that it expanded manufacturing to a second facility and has grown from 70 to 240 employees. And also Washington is no longer its primary market. The legislative auditor recommends that the legislature allow the credit to expire in 2030 because the objectives are mostly met and installations have continued after the program funding limit was reached. And if the legislature wants to broaden low-income participation in the production and use of solar energy, it should consider other alternatives. And
Are there
happy to answer any questions.
Questions? Eric and Rachel, this recommendation puzzled me, so I'd like to have further explanation of it. The overview, the objectives are mostly met, but in the report, it really shows that if a key policy goal of the legislature, which as a legislator who was here at the time, I know was a key policy goal, was to install additional solar capacity. That seems like a really critical goal that we have not met. We ran out of the existing funds. And so I'm puzzled by the recommendation that, or the finding that terminology of mostly met when one of the most critical elements, or more than one of the, two of the three really were not yet met and seem to be growing in importance if we are, for example, going to go to solar for electric vehicle charging. Do we need to have an expansion and reinvestment in this program? So can you explain why you phrase this as mostly met and how this might work in terms of being able to do a better job with low income access?
I'm thinking Keenan will probably want to jump in with more information on this, but one thing to note is that, as I noted, the program did run out of funding the funding was all allocated by 2019, but installations continued after that point, and we don't have full data on just how much solar has been installed since 2019. But from the utilities that we do have data on, we know that it was more than 15 megawatts. So 115 megawatts of solar capacity have definitely been added since 2017, just not through this program because it was closed 2 years ago. So I don't know if Keenan wants to weigh in on the other questions.
Well, and to maybe, first of all, to just reinforce, I think Rachel's point there is what we are seeing is even without additional funding being provided, there are new installations that are occurring without this incentive and likely hitting that target already without having the program in place. So there are other things incenting people to continue adding them, which is good for the goal, as you were pointing out, Representative Paulette. And appears that it's not needing to have additional funding in the program to reach that goal. I guess the other observation relative to low-income participation is we think it's possible that it's the structure of this program may not really be making it something that looks like it would be feasible for low-income participants. So it's not that that's not a laudable goal to achieve, but we don't think continuing the program is going to increase low-income participation. You'd probably want to think about other options that focused on a way to get benefits to that group more than this kind of broad stroke approach that the current program is structured around.
And the report doesn't go into those options, does it?
Yeah, well, I'm not sure if we know all of them, but it looked the evaluation we did on this one looks like it's not working to expand to that area. So something different probably would need to happen.
Thank you. Representative Fye.
Thank you, Mr. Chair. Full disclosure, for the longest portion that this program operated, I managed the program. And so I'd be happy to talk with you offline about a little bit more detail, particularly about why this didn't work very well for low income individuals. I think the incentive wasn't set up in a way that made it conducive to that. And there were attempts to try to make it work. But the structure, the limitations of the structure of the program made it nearly impossible. I do have one question, if I can ask it quickly. You had the information on Eastern versus Western Washington. The largest single project was a project in Lind, and it was a large project. It was a community solar project by Avista. To what extent does that kind of bias the results here in terms of if you took that one out, so to speak, one big project really may potentially affect the distribution between Eastern and Western Washington?
That is a good question. For the spatial analysis, we focused on projects that were residential scale.
Okay, not communities. Okay, great. Thank you.
Thank you for that offer, Representative. I will gladly ask you to teach me a little bit more about this.
Happy to.
And are there any other questions? I also note that in the agenda, you'll see that we've got folks available from DOR, Health Benefit Exchange, and LCB available to answer questions about the relevant tax preferences. Any further questions? We're actually gaining time, which I'm surprised about here. Okay. And our last exemption then is for the targeted urban area exemption, which is a little bit different since we've actually recently acted on this, and as I'm sure Dana will explain.
Thank you, Representative Pollitt. Yes, our final review we'll cover today is kind of a recap for you of one that we presented to you in January of this year. We reviewed a property tax exemption for targeted urban areas, presented it to you at your January meeting, and there has been some action since then. The tax preference has been scheduled to expire at a later date, December 31st, 2030 now, and the estimated beneficiary savings that we did provide to you back in January for the just past biennium remains at zero. The legislative auditor updated his conclusion to note that you acted on his recommendation to ensure that the preference is available by modifying the preference's population criteria and by extending the expiration date. Again, just to provide a little background on what we told you about in January, this is a 10-year local property tax exemption. And when we talked about it earlier, it was limited by both population and geographic criteria to really only be available for 3 Snohomish County cities, like Stevens, Arlington, and Marysville. What we found when we looked into this was it was unclear if those cities could legally offer the preference after 2018. And that was because Snohomish County, which ended up being the only county that met the population limits, had exceeded those population limits in 2018. No businesses had applied for the program during the time period that Snohomish County did fall within the population criteria. And no other county in the state met the population criteria at all. So the Department of Revenue determined that no city could really offer this tax preference after 2018. The January legislative auditor recommendation was that you modify the population criteria and extend the expiration date if you wanted the preference to be available for use in the future. And you did just that. Engrossed Substitute House Bill 1386 passed and has now will take effect on the 25th. And it removed the population and geographic criteria and extended the expiration date of the tax preference, among some other things. The legislative auditor thus has updated his recommendation to say this preference should be continued and reviewed at a later date. Noting that you did change the population criteria and extend the expiration date in response to the January 2021 recommendation. In addition, the legislative auditor recommends that the Citizen Commission schedule this preference for an upcoming review in 2028 to determine if it has achieved the goals of encouraging new development in areas that are underdeveloped or underutilized and the increasing family living wage jobs in those areas. I'll pause here in case there are any questions.
Are there any questions or comments from our Snohomish County members? Not seeing anyone. Okay.
We'll close on up here. Just a few more information bits. This is a long process we go through presenting these reports. In August, we will present the same preliminary report to our Citizen Commission. And in September, the Citizen Commission will take public testimony from stakeholders and anyone else that wants to comment on the 2021 reviews. In October, the Citizen Commission considers whether to adopt comments on these reports, and we'll be back before you in December with our proposed final report. The link you see below is for all of the reports in full, as well as you can access the short one-page summaries and the videos from that link. Here's the contact information for all the analysts that worked on the 2021 reviews, as well as our managers, and we'd be happy to answer any other questions that you might have.
Thank you very much, Dana, and all the staff for presenting. Senator Hasegawa.
Yeah, thanks, Mr. Chair. I'm just trying to draw a little clarity from your January recommendations, because I don't see you referencing them on your one-pager or executive summary linked on the agenda. So my recollection of that original preference was it was narrowly designed to just benefit precisely those 3 cities that qualified for that exemption back in the day. But because of population growth, the narrowly crafted bill did not allow them to, at some point, because they didn't use it within the time allowance, and when they finally might have been able to use it, they had grown too much. So we had to narrowly modify the qualifying criteria so that they could still continue to qualify. But in that process and through the sausage making process, it was kind of blown wide open so that everybody now qualifies for that tax exemption. And, you know, even the city of Seattle, which I don't think needs to provide any exemptions, is allowed to provide these tax exemptions. So I'm just wondering what your recommendation was, because you flipped through that slide pretty quickly in January, and how the new bill has changed your thinking about the implications of that bill.
Senator, I'll try to answer briefly, and Keenan, if you'd like to jump in, feel free. We did recommend that we pointed out the fact that no one could legally provide this tax preference as it was currently structured, and it was soon to expire to new participants. The old expiration date, I believe, was January of 2022. So we pointed those out. As you noted in the sausage making of the legislation, the bill did change back and forth a few different times. At times it was narrowed to just by population criteria to just basically the 3 cities that had initially been the focus of it. And there were efforts to make it available to other cities as well if they chose to adopt an ordinance to put into play that 10-year exemption. As the bill passed the legislature, it was in the form where any city that meets other qualifying criteria, and there is other qualifying criteria as well that we didn't discuss as much, because it really didn't cause anybody not to use the preference like the population and geographic limits did. So that is the way it ended up and was passed by the legislature. Now still a city does need to pass an ordinance through its city council. So at this point in time, unless the city has done that, only those cities that have passed those could use it. So at this point in time, I would believe it would still be limited to the 3 cities in Snohomish County, because those are the only ones that we are aware of that have enacted an ordinance to use this.
And if I may, Representative Paulette, please, just to clarify for Senator Hasegawa, our observation wasn't, and which never is, to design the policy. Our observation, the first report in January, is your intention was to make this available to certain municipalities, but they are not able to use it. So you need to reconsider what you want to do if you want them to make it available. The decision to make it available more broadly that's a decision the legislature made, and I think you have a interesting question that probably is best answered by your colleagues who participated in the development of the legislation.
In other words, we need to ask ourselves this question. Senator Hasegawa, any follow-up?
No, I just voted no against the bill.
Can you remind me if does the exemption apply to the state property tax or just the local?
It is just the local tax representative, so it does not impact the state property tax collected when it is enacted. Yes.
Thank you. That was
if I could, Mr. Chair.
Please.
I might follow up, but this might be an interesting one for a 5405 analysis, though, because due to the displacement, I mean, it's going to be a tax shift, right, on local residents. And the extreme displacement that's happening in cities like Seattle or wherever, this tax shift could even further exacerbate that displacement and gentrification problem in the area. So it might be something to think about trying to do a test run for some sort of equity analysis.
Good point. Any other questions or thoughts? In that case, not seeing any other hands up right now, I will take us back to on the agenda. Keenan, anything you'd like to just say to close out the discussion of the tax preference reviews?
No, just a reminder again that there's a process that this will go through with the Citizen Commission, and then you'll get their views as well as views, if they have them, from some of the various agencies, state agencies are involved in some of them. And we'll be bringing that all back in front of you to hear and consider this again later in December.
And the commission's meetings, you are easily available right now since they're online, and you can watch join in the meeting or watch the replay and learn what the comments from stakeholders in the public are. And so I encourage people to either join and observe live or follow up and watch the Citizens Commission meetings. And then at 1:30 today, we will reconvene for the I-900 subcommittee public hearing with a state auditor JLARC report on implementation of the state auditor's I-900 recommendations to date, and the state auditor's office will presenting 2 performance audit reports: improving K-12 students' access to behavioral health prevention, early intervention supports, and Medicaid program integrity at the HCA, Healthcare Authority. So that will be at 1:30 today, live here on your JLARC TVW station. Is there any other business or good of the order that anyone has? Representative Fine.
Thank you, Mr. Chair. Either now or maybe privately, you could maybe update me on what the results of the conversations the executive committee had with respect to the performance by the Department of Employment Security at our last meeting?
I think that should be a public discussion, and I'd like to ask the legislative auditor to report on the letter that we sent and the status of it. And perhaps if Senator Mullet has joined us as the chair who at the time, but we have sent a letter asking ESD to present to us a performance improvement plan and a follow-up letter. Keenan, would you please give us an update? And then our Senator Hasegawa, there's a question after that.
Yeah, there was a discussion by the executive committee to ask for additional information from the Employment Security on how they have performed, specifically in terms of the quality of responses to applicants for unemployment insurance, and also specifically relative to how timely decisions are being made. So there was a request for a performance improvement plan that would shed light on that. And there was an acknowledgement in that letter from the executive committee that there is some future reporting that the Employment Security Department has to do under new legislation, and a suggestion to implement this additional performance reporting into their upcoming statutory reports that are due in September. And there was a response from the Employment Security Department Commissioner agreeing to pursue adding additional measures. And so that's the status at this point. And so I think all of us will be waiting to see what is reported in that upcoming report to the full legislature in September.
And would you resend the ESD director's commissioner's letter? And I think we are having, very salutary effect here of asking for a performance improvement plan based on the consensus of all of the JLARC members. And we've also agreed today in response to news reports about the lack of responsiveness for and timely response to public records requests for reporting on ESD. We've sent a letter asking for ESD to provide us the public records request log that every agency maintains. And that log includes how long it takes to respond to requests. And we heard during the executive committee some of the data, because JLARC already collects data on all agencies above a certain level on their responsiveness under the Public Records Act as one of our statutory duties. So that letter was approved by the executive committee this morning, and we can share that, of course, with everyone. There are other questions here, and Senator Hasegawa.
Thanks, Mr. Chair. I was just trying to recall when we had that last conversation. Was that at the June 15th meeting? Because I do not see it recorded for posterity in the minutes of that meeting. And it is, I think, a very important conversation to have, and we should be documenting this conversation. So I might ask that at least today's conversation, since we've already previously approved the minutes of the last meeting, be some sense of our conversation be in the next set of minutes.
And if I may, Chair Paulette,
please.
The discussion Senator Hasegawa happened in one of the I-900 hearings, not the JLARC.
Got
JLARC
it.
meeting.
Thank you.
But obviously all those meetings are recorded and available on TVW.
Thank you.
Yeah, so it was in response. So we've also had discussions with the state auditor's office. And I just want to say that Auditor McCarthy and the staff have been very responsive. And we discussed with them the desire to have a performance improvement plan from ESD and to have a follow-up to the performance audit that led to this whole discussion, and what the timing of that would be, because just asking for a performance improvement plan without a review as to whether or not performance improved, I think would leave us, given our concerns, feeling like we had not done our job. So the state auditor's office has engaged with us, and in terms of the potential timing, if there is a performance improvement plan, they would then be able to do a follow-up inclusion in follow-up performance audits a year from now in regard to whether or not there was an improvement with real metrics. And I think that we're looking for real metrics on performance improvement, not just we did better in connecting with people, but what are the real metrics in terms of wait times, responsiveness, appeals, all those other things that you voiced concern about. Representative Fye.
Oh, thank you, Mr. Chair. I just wanted to thank you and the executive committee for not letting what happened when Employment Security spoke to us, let it pass. It's easier to let it pass than to do the hard work of making something stick, so to speak, in terms of getting the results that the public expects. And as we all know, there's a lot of people who have been harmed by the performance of the Employment Security Department over this long period of time. So I want to thank you very much for sticking with it and getting the job done.
Well, we've just begun, but I think that this really shows the incredible value of this committee and the collaboration of all the members to take our oversight and improvement role seriously. So we will forward the correspondence, and we should be hearing in September, correct, Keenan, from ESD. All right, with that, unless there's any other good of the order, I really appreciate that that was raised and that we included that update. Thank you. And with that, we will adjourn the meeting, and the I-900 subcommittee will convene at 1:30 p.m. And thank you, everyone.